Okay, so the good news is that coming from yesterday's analysis, we were able to meet the upside targets that we were observing, right? These would be these right up here. Now, these upside targets are not quite the ones that we were actually wanting, right? But it is the first step in order for us to kind of clear that first leg, return back, and then start testing the ground before we get above that first leg and then go for the second leg again. Now, I will say that price action is acting a little strange in light of the government closure that's coming up or potentially coming up on Tuesday, right, guys? So that's it has nothing to do, right, with the crypto markets. The crypto markets are going to continue going. In fact, I can give you my honest opinion as far as that. I think that due to the anxious liquidity that the traditional markets will have, that crypto may actually see an inflow of cash. Now, I don't have any iterations to backtest here, but since it's kind of unrelated here, but the 24/7 schedule that crypto has, right, will essentially continue. So it's leaving me kind of in this weird feeling that there may actually be some volatility here, and maybe some volatility upside, unless people get afraid and they want to liquidate their positions right before other people sell off. There's a bunch of variables here, guys. I will say that there's a lot of trickery in the markets as well. So let's go ahead and just get this thing started and figure out. But before we go there, please do me a favor. Hit that like button, subscribe to the channel. Do everything necessary to get this thing to live long, thrive, and survive. My name is Arca. I'm actually coming out here at 2:23 a.m. Pacific time, September 28th, Sunday. And we are observing the price action here on XRP, 277.64. Okay, now I gotta tell you, right, that the formation that we noticed just yesterday, it was this right here. It was kind of an inverse head and shoulders. We were able to put together some targets to the upside, some of which were going into the 281 area, 284 area, 287s, and even the 290s. Now, I'm wondering here. We're gonna go ahead and validate this and test this, right? But I'm wondering if we are actually just testing, your new legs up, right? Just getting some fake outs here, whatever. But could it be actually a continuation? Now, the problem there is that I'm not sure if we have validated this either. Guys, please take my psychology into consideration here, guys. I'm speaking to you a little nervous here because I don't want you guys to start thinking that, the floor is here and we're just going to rock and roll and then let's just go, right? No. These are very difficult times for us to determine any long-term positions. In fact, I wouldn't encourage it. There is this larger, really wonky, head and shoulders formation here that almost got invalidated with yesterday's, the analysis thread after last night for us. So I am still kind of seeing that shape, and also now as we're trying to see what that bullish perspective would have been, right, in the shorter time frame using the inverse head and shoulders here for an upside and an invalidation of this formation. Well, in doing so, we're actually now building another kind of bearish one here, and that would be right over here, right? So now you have the working properties of like a shoulder here, a head and a shoulder, and price action is feeling a little bit weak. Should you want to know what that target to the downside could be, I can certainly provide that here just so that we can all be in the know, right? So let's just say that this would be, you know what, I'm going to have to actually use this right over here, or let's see. Yeah, I think it would actually be best if I used the ones down here like this and give us a little bit of regression, something like this, guys, just to get the better part of a bunch of connecting points here. And this will give us the neckline for the head and shoulders, right? So we just take a trend line here all the way down to that neckline, and this will give us the super low target of right about your 272. Well, it's not, I guess it's not so bad. We've already seen that 272 there, but it's not guaranteed that it's going to happen. In fact, there is another formation here that you guys need to be kind of aware of, where the bulls could be having some fun with the bears. So I mean, I don't think that we're going to get like I said yesterday, guys, I don't think we're going to get that proper move to the upside just yet. So, sorry guys, the formation I'm looking at here has now changed in light of this candle, and that would actually be this is a right angled broadening wedge, and that highlights a pretty bullish statement here. Of course, it can be played both ways, no problem, but it is a bullish statement nonetheless. So this is your right angled, or symmetrical, right angled, right broadening wedge here, descending broadening wedge, and taking into consideration its expansion, it does mean that there's some anxiety present. Of course, they can be played both ways, right? But usually when I see a descending formation after this downside, it typically gives me a feeling of upside continuation. So why don't we just go ahead and kind of highlight this a different color so that we know that this is the formation that we're observing here. So that's this formation here. Okay, now how do we figure that target out though, right? How do we know what that could be? Because in fact, this could be a zone right up here for the trend line on top. It could really be just like this right here, right? It could really be like that too. Okay, so yeah, this is that spot right now. That we got to that 279.05. Let's just get, we can just get rid of it now, since this could potentially take over that target. Okay, so here we go. Perfect. Now, depending on where we break out, right? So we have let's see, test 1. We have a test 2. 3, yeah, there is a possibility, unless this is a grouped test 2, right? But usually your test 3 introduces a pretty large capitulation before continuation. So I would say that we have maybe 1 or 2 more tests of this, right? And the 15-minute time frame is pretty damn fast. That could be roughly around 6 a.m. My time here. So presently, remember, it's around 2:30 a.m. 15-minute time frame does pass pretty okay. So let's just say that would be one of the zones here that we would consider for potential breakout. So we would just kind of take a trend line there from that area, which would be the bottom side before we get the official breakout. So that would be leading us towards a target of, my goodness, there we go, towards a target of roughly 282.19, which is very much confluent to the 281.74 that we're looking for, which we already reached, and also within this range overall. Okay, that's if it happens, guys. And now we are getting a pretty nice push to the upside here. Now, all of this is immediate short term, guys, because the macro time frame is kind of still sitting the same. There's no invalidations just yet. In fact, we're coming to closes. And you know what? I could actually talk to you about one. I could actually talk to you about one larger time frame. Guys, please do me a favor. When you come into the Discord and you join Discord, you're going to get DMs, right, from imposter Arcas. Like, they're going to pretend it's me, using my credibility to try to get you to transfer money or do bullshit like that. Guys, please do not do that, right? It is not me. And I would never ask you to transfer, or if you're trying to find out if you're trying to, guys, I just don't have the time for that, right? I will never friend you first. I will never message you first, ever. It is not me. Okay, guys, so make sure to validate who I am, and everything will be good. Also, please remember that I only have one Twitter account, one Twitter X account. I have no anything else other than just YouTube, Discord, Twitter. That's all. Okay, guys, so don't get fooled by these imposters out there, guys. It's just at Arcables. That's it. I have almost 6,000 followers, following 89. So just make sure to kind of use that as a preface, right? And I say that in the account, it says that I only have one account. Okay, one more time, guys. The master students are coming into their last 2 weeks. We're going to be starting the beginners all over again, and they're already signing up. So before those seats go away, I need you to get there, because there are limited seats due to the limitations and bandwidth of the server. Okay, guys, so make sure to sign up in the description below. Get your butts in there. The back to school event and sale is live. Okay, guys, take advantage of it. Make a difference in your trading career, and let's go ahead and get it done. All right. So yeah, let's go ahead and show you that one time frame that I was going to tell you about. So why don't we just go ahead and hide all the drawings here and go up towards the weekly time frame and bi-weekly, because these are giving us a pretty nice set of information, right? So check this out here. Okay, so your weekly time frame typically retraces at around 6.2 hours prior to the closing of its bar, which right now it's sitting at 14 hours, 28 minutes, and 3 seconds and counting, right? So that's good. Now, the biweekly time frame would be also another one that's closing, and that also has a decompression average, right? As it's going down, it would typically decompress at around almost times 2, a little more than your weekly time frame. So that would give you around 12.5 hours, right? Great. Now, this is sitting at 14.27 hours right now. So we've been decompressing a little bit early, right? That's because we had closures yesterday, the 1, 2, and I think the 4-day time frame. So good. So this is now starting to, this is now starting to give us some retrace properties, of which the biweekly would do first in about 2 hours, right? This is statistically speaking. It's an embedded behavior, and it tends to happen often, right? It's not perfect, but it does happen often. So we would get this retracement towards the 50% of this biweekly bar in roughly 2 hours from now, and that would give us a ride to around that 291 that we've been talking about so much, 290 or 289, 290, 291, right around there. And while we're doing this pull to the upside, your weekly would then, when it is at 6.2 hours, 6.25, whatever that is, this would then take over. So this is interesting, because if we're talking about a 2.9 or whatever, 2.91, we would already be reaching the top side of your weekly bar here. So that means that your immediate short-term time frame is getting expanded. It's getting actually expanded to a real top area, which means that we would start cascading smaller time frames to then echo into larger time frames for further push to the upside. I know this is kind of a longer video, and it's kind of a video that's really peaceful here, but I want you guys to also see what I'm personally seeing through the eyes of through my eyes into this chart. Okay, now this is adding a really good dynamic. The 1 month time frame is also coming to a close in 2 days and 15 hours. Same preface here as the biweekly and the month and the weekly time frame, in the sense that, okay, well, what would the monthly time frame do, and when would this start decompressing? Well, it would start decompressing when we're roughly at around 50 hours to the closing of this bar. So just a little over 2 days, right? And we're approaching that in just, I would say, another 10, 12 hours or whatever. So imagine that, right? So we have confluent pushes and pulls from all these closing macro time frames, right? The bi-monthly, guys, the quarterly bar is also closing in 2 days and 15 hours. This takes roughly around 3 days, 3.4, 3.5, 3.6 averages, guys, around there. So 3.5 days prior to the closing, this decompresses towards its 50% after being so high, which it has exactly done that, except it did it early. So usually when you see an early decompression, there is a rise, right? It'll start stretching the rubber band again towards the upside. So this is curious, because it takes the effort of macro timeframes to influence the way that the quarterly bar works. That is my thesis here, guys, and that's why I think that we may have seen, with the exception of maybe seeing today's price action, risks of potential 271 or 270s or 273s. Sure, that's fine, but the overall behavior here would lead towards an upside decompression, guys, or upside, recompression, right? Because we've already decompressed, so we're going to go ahead and pressure that upside again with the stretching of that rubber band theory that I told you about. So yeah, guys, and that's really interesting, because if we use, here on the bi-daily time frame, we're on a fairly new bar here, right? So if we use this bar here to get ourselves into the 291 area, you're sitting right about here at this point. Now, that point there is not random. The point right here is not random. Why isn't it random? Well, because that marks off the 50% of your retrace from this area to this area here, right? So let's go ahead and kind of just mark that off. Top side there, Oh man, come on. Let's see. Top side here, bottom side here, and right over there is, look at the target, 290.50. So 289, 290, 291. It's literally that, right? Everything is rhyming in a certain way. We also notice that we have this very bullish formation kind of building here, right? So, yeah, guys, I think, probably running here. Not sure if it's going to happen today. I still feel like we're a little bit dry, right? We still have those... we still don't know what's going to happen, right? Into Tuesday, it could add fear into crypto. It could add bullishness into crypto. All that anxious money trying to get in somewhere, anywhere, right? And seeing that crypto is in a discount, man, that could be a pretty good area for pressure to the upside to start happening. Okay, guys. So my personal bias is siding with the bulls for now, and I think the bulls are still trying to. They're just trying to reaccumulate here at these demand zones, which it might be confusing the bears for additional selling. But yeah, please be careful out there in the markets, guys. Do not over lever into these unknown times, right? With catalysts of just huge potential for both the downside and the upside exposure. Just please be careful out there, okay, team? Make sure to sign up, get your butts into the master's course, right? It's only $100 for a 9-week mentorship with me, guys. It'll be worth it. I will give you guys some information, and hopefully this can help you trade the markets and read the markets correctly. Okay, guys, well, I think this is pretty good here, and we'll leave off. Should there be any questions, reach out to me, guys. arcabulls@gmail.com, and we shall speak very, very, Jerry, Scary Larry soon. Adios, team, and yeah, adios. Please take whatever I do show and iterate within these videos as just a form of entertainment, as it cannot suggest for you to buy, sell, or hold any assets whatsoever. Ever, 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 ever. I need you to do your own due diligence, and everything will be cool. But with that said, team, I wish you well. A very, very good rest of your night and or day, and I will catch you at the bell mañana. Adios, team.